Hello, members, one and all of the Salivation Nation. Some of you may be aware and be watching the price of Bitcoin, and it's taken a little bit of a hit as of late due to some new regulations that China are implementing. There's an article here from CNBC that states that Bitcoin could hit $100,000 in 2018. According to an analyst who correctly predicted the cryptocurrency's rally at the start of last year, K. Van Peterson, an analyst at Saxo Bank, added that the other rival digital coins could also outperform. And Van Peterson forecast in December 2016 that Bitcoin will reach $2,000 in 2017. At the time, Bitcoin was trading below $900, according to CoinDesk. Bitcoin blew past $2,000 figure in May. Van Peterson said Tuesday that Bitcoin could hit between $50,000 and $100,000 in 2018. First off, you could argue we have had a proper correction in Bitcoin. It has had a 50% pullback at one point, which is healthy, but we still have not seen the full effect of the futures contracts. The CME and CBOE both launched Bitcoin futures trading contracts last year. The move has seen as a way to get more institutional investors involved in the cryptocurrency market and legitimize it. But trading got off to a light start. Van Peterson said that more institutions will get on board over time, but it won't happen quickly. So to reach that $100,000, Bitcoin would need to rally over 635% from Tuesday's highest price of $13,601, according to CoinDesk. Previously, Van Peterson said that $100,000 could take 10 years to hit. Also, Bitcoin has been trading sideways since the start of the year, but the Saxo Bank analyst said that the Bitcoin tends to trade around a certain level, then re-rates. I wouldn't be surprised if it's something we are seeing. It's kind of building a foundation, then it will re-rate a bit higher. Bitcoin and other coins, including Ethereum and Ripple, saw a big sell-off on Tuesday, however, and that's the day that we're recording this video. Still, Van Peterson said the Ethereum is likely to outperform Bitcoin this year, and that's quite interesting. And so the article kind of goes on, and so you kind of get the basis and the foundation for that side. Then you have this side from Forbes on why Bitcoin, 12 reasons why Bitcoin could fall below $1,000. And Bitcoin continues on its roller coaster ride, falling from a high of 19,800, almost 20,000 to December 17th, to around $12,000 this morning, which is Tuesday of the recording of this video. Cryptocurrencies, and especially Bitcoin, more than caught the attention of investors in 2017 when they became infatuated with it. Bitcoin started 2017 at under $1,000 and ended up almost at $14,000 with a gain of 1,338%, the biggest bubble in history. It nearly reached $20,000, coming close to 19,800 on December 17th. So this has led to Bitcoin and other cryptocurrencies getting huge media exposure and the creation of thousands of new ones. So there's many reasons why they could increase or fall in value, but the underlying reasons should be supply and demand. And the author talks about a previous article wrote with 9 reasons why Bitcoin's price could rise $100,000 or more. But the thing is that some of these reasons why they're going lower, I think, are quite interesting here in this article, and I think they probably hold more weight to them, I think, than the speculative nature of why they could go up. And so basically, one of them is regulation. Could have the biggest impact, and that's what we're seeing today with the price going down with what China has done. And just by the way, today, Bitcoin, as of the preparation for this video, it was at $10,800. Now it's at $11,161. And here you can see where it was not too long ago, and it's starting to climb back up again there. But look how much it's lost since yesterday. So is it on a rebound? Could it head back up? I guess it could. But South Korea, and each nation has their own situations or regulations that they have to consider. South Korea has implemented some regulation and is considering additional ones. A few days ago, it announced that cryptocurrency traders would be fined if they do not convert from virtual accounts where they could trade anonymously to real name accounts. One indication on how much regulations could impact a cryptocurrency price is when South Korea's Ministry of Justice issued a premature statement on banning cryptocurrency trading. After the statement was corrected, the price of EOS, a popular cryptocurrency in South Korea, jumped 40%. Japan started to regulate Bitcoin and other cryptocurrencies after Mt. Gox, a Bitcoin trading platform, collapsed and went out of business in 2014. It also passed legislation last year that legalized Bitcoin and other cryptos as a legal currency and an asset. These were positive steps in helping them become more mainstream, but as with any legislation, additional rules could be put in place to hurt them. China. There is a Reuters article this morning, Tuesday, saying authorities should ban centralized trading of virtual currencies as well as individuals and businesses that provide related services. This would be in addition to the country's ban on ICOs or initial coin offerings. Crypto trading exchanges and limits on Bitcoin mining. U.S. regulation. The SEC chairman released a statement last month on cryptocurrencies and initial coin offerings. It laid out where the market is currently wide open, so investors could be very careful. What questions an investor should ask is that the SEC is very interested in this new technology. The U.S. Senate is planning on meeting with the SEC chairman, that's Securities Exchange Commission, and the Commodities Future Trading Commission, or CFTC, chairman next month. While I wouldn't expect much to come from the discussion, or at least initially, it could bring CCs more into the regulatory framework. And already some of these exchanges and the SEC has actually shut down one exchange and cryptocurrency market, I guess, that a friend of mine is actually involved in. And it's frozen. All the money in it's frozen for now. And so the challenge with many of the current potential regulations is that even though one or multiple countries could ban trading or exchanges, it doesn't necessarily keep investors from executing trades in another country. Yeah, they'll probably find loopholes somewhere to do it. But here's another one. There's no, quote, value to it. Bitcoin or cryptos don't generate revenues or profits in the traditional sense. Miners do create revenue for themselves, and traders charge a commission, but a Bitcoin itself doesn't do anything. There isn't a physical presence to it. And as in other cryptocurrencies are just bits in computers. Since it doesn't generate profits or cash, it can't be valued in ways that most other assets are. While a commodity such as gold can be used to create something of value, a Bitcoin resides in a computer. If enough uses aren't eventually developed for them, their demand could decrease. And where the money is made is these exchanges charging these fees. And it's just, that's where the money's made, and the exchange and signing, all this that's associated with the trading of the Bitcoins. Volatility can create nervousness. And I know Goldman Sachs has a chart that shows the daily volatility of Bitcoin versus other investments. You don't have to believe because it's Goldman Sachs, but even if it's not exactly accurate, I think it speaks to the really how volatility the Bitcoin and all cryptocurrencies are. It's just a matter of fact. And I think what's quite interesting with this chart is you see how silver and gold, silver is much more volatile than gold, and very interesting indeed. And the T-bill is the least volatile. Leverage can be very bad. The CBOC, or the Chicago Board of Options Exchange, and the CME Group started to make a market in Bitcoin options last December. These can be leveraged investments where only 44% of the total value needs to be covered. While the 44% is higher, too much higher, than other future contracts, given the volatility and risk involved, it makes sense. However, if Bitcoin's price moves too much, it could force contract holders to liquidate, putting more pressure on Bitcoin's price. And he predicts a shakeout is coming, since there's 1,450 cryptocurrencies listed at CoinMarketCap.com as of Tuesday morning, with over half of them having a market cap under $10 million. And that Bitcoin's is over $200 million, even with the price down at 12,300. There may be some legitimate uses for the smaller CCs, but I suspect that hundreds of them will disappear. This would be, in theory, decrease the supply of cryptos, which could mean investors may move their money to other cryptos, or the investments could be wiped out, and the stain of so many going under would decrease demand. And yeah, that is pretty interesting to see, because only the big boys are going to come out on top, and it may not be Bitcoin. ICOs, the rapid increase in Bitcoin's price has led to hundreds of ICOs, or initial coin offerings, launching in the past few months. Litecoin was launched in August last year for the dental industry. Wow. The value of all its coins spiked to $2 billion last week and has fallen to $600 million. And wow, so there's a Litecoin for the dental industry. And I had a chance, and I passed up on it. I probably should have went with the experiment from IKEOnet, made the offer to help me with it. If I would have spent $30, I could have created my own cryptocurrency. Now, I wouldn't have been able to have an ICO, but wouldn't that be pretty cool to have a Salivate coin or a cryptocurrency? Or anybody could do it. I think he's done it. While Litecoin may be legitimate and survive, there are also instances of whatever appear to be outright fraud. The SEC is warned about ICO fraud, and the CNN article describes 3 potential ones. While there aren't any assets behind Bitcoin or other well-known cryptocurrencies, a huge percent of the new ICOs really could be all fluff. If too many ICOs are fraudulent, this will hurt investor demand for CCs in general and for legitimate ICOs. And by the way, as I mentioned before in previous videos, always do your homework. I posted a video about an ICO that for internet in Western Africa. Always be on the lookout and do your research for those, and check and make sure they have a white paper. That's extremely important. And just because they have a white paper doesn't mean they may not be fraudulent. They've just gone through the extra trouble, but most won't go through that trouble to write a detailed white paper and other documentations on the matter. Just be very careful for those some of these new coins and some of these ICOs. Hacking theft of CCs. Probably the most well-known and largest theft of Bitcoins was Mt. Gox, or Mt. Gox, a Bitcoin exchange in Japan. It was handling over 70% of all Bitcoin transactions, but was hacked in February of 2014, and 850,000 Bitcoins were stolen. At the time, they were valued at $450 million and would currently be worth about $10 billion. Just last month, Ubit, a South Korean Bitcoin exchange, was hacked. Almost 4,000 Bitcoins, or 17% of its assets worth $48 million, were stolen. And fear of missing out. FOMO has helped create a lemming effect. Investors don't want to miss out on the next big thing, and to a degree also want bragging rights that they own Bitcoin. It was reported that CNBC that Coinbase, a CC exchange, had 11.7 million accounts in October last year compared to Schwab's 10.6 million. It increased in November, added 300,000 in 1 week to get 13.3 million. If business isn't a rush to participate, nothing is. That's kind of part of the reason why I kind of created my Coinbase account. However, this could turn on itself. If enough Bitcoin owners decide they want or need to get out, the value of Bitcoin could drop dramatically. And then there's other scams as well, Bitcoin mining scams, too associated with criminals and rogue states, third parties changing their minds, Bitcoin and blockchain. And then the thing about blockchain, the technology behind it is kind of outdated. All comes down to trust. And that's why gold will never go below $1,000, I believe, because when it's all said and done, all the 12 reasons that was mentioned before is the one reason why gold will never go below $1,000, I believe. It is the one asset that is what it is. Gold is gold. It comes in many different various forms, but when it's all said and done, gold is valuable and has the history to back it up. So I hope you enjoyed this video. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.